Hey everybody, this is Danish from TYK Trade, and you are listening to Trader Talk, the show that gives entertaining blend of professional insight and inspiring stories from professional traders for people who love technical trading. Today we will be reviewing NASDAQ and S&P 500 chart with Javed, who we already know. He's been around the market for 2.5 decades. And today we are with Ali as well. Ali has been a lifelong investor and real estate, crypto, stocks, and ETFs as well. So let's get the ball rolling. I'll have you guys take the lead.
Okay, I can start. Danish, you want to pull up the chart?
Sure.
Is there a way for
NASDAQ
you
or
to
ES?
NASDAQ? Can you get rid of all of your lines? Can you
Sure.
pull up a blank chart? Can you pull up a blank one?
I can get rid of all the lines right now.
Okay, great. So can you draw a line? Is it daily? Put it on daily. Yeah, it's daily, right? So I want to draw a downtrend line from the top. No, you had it good zoomed in. Okay, so that's fine. We were uptrend in the pandemic. That was
So
fine.
this was the great uptrend.
Yes.
Now we are in a
And
bear
then it was
market.
sideways at the top. You have a good box there. Now I want you to draw a downtrend line from the top, the all-time high.
This was
Or
the
no,
all-time.
no. So go over to the right side of the box. Okay, so that's fine. Draw that line. Yeah, draw that line. That's fine. And then draw another one going over from the next peak over at the top of that box. Yeah, draw one there. Yeah, that one's a good one. I like that one. I like that one a lot. So I have that one drawn on my chart right there.
Okay.
Okay, I like that. And connect it at the top there. It's not connecting at the top.
Here?
No, the other one. Yeah. Connect it up there to the peak. Yeah, right there. Yeah. That's good. So that's a real line. And draw a parallel line under it for a channel. Yes. I would say you don't have to go that far back. Come to the first higher low. Yeah. Or lower high. Lower low. Yeah, lower low. Yeah, that looks parallel enough. Yes, that's good right there. I think that has been the whole downturn right there. That's
Hold
it.
on. Let me redraw this.
Yeah, go ahead. And anybody who overcomplicates it is missing the fact that it's that simple. Yeah. Yep. Yeah. That's good. That's a channel line. That's a better channel line. Okay, good. So I think that's it. That's the heart of everything.
This is the mean line. We fell below the mean.
Yes.
Overshot the top, came back, kissed the mean, and once more tested the top, this time with respect, and then went sideways.
So we're retesting the line now.
And testing it.
Can you draw another downtrend line from the peak in April? The lower high in April.
Lower high, lower low.
Yeah, the lower high. Yeah, starting from there, then hit another high. Yeah, and draw it all the way through. Yeah, draw it all the way through. I think we kind of retested that. Yeah.
We already did.
Yeah, we retested that. So that's a classic retest of the top of that channel. I think we had that retest and it was successful.
3 days
so
back.
So far.
Yeah.
We got a higher low off of the top of the old channel. Yes.
Yeah. And in fact, I was also looking at this.
Yeah, I like that. So we're in a wedge. So you can draw one more downtrend line from the lower high in June. Start at the lower high in June and hit that. Yep, hit that lower high. Now we're in this wedge. So that's
now
what
we are
I
in this
have.
pennant. We don't know if it fails, the pennant fails, we go up. If it materializes, we're going down.
We go down. Exactly. So the classic pennant, also known as a wedge, also known as a spring or a coil, whatever you want to call it. So we're coiling for the next energetic move.
On the way up or down, that's the thing.
And it's that simple, really, at the end of the day. To me, it's two channels and a pennant, and that's all that happened. Now, if you zoom in, you're going to drive yourself nuts. You're going to need therapy. If you zoom out too much, you don't see anything.
Yeah.
Like zoom out, like meaning if you look at monthlies and quarterlies and yearly, this makes it clear to me. So zoom out for the beginning of the pandemic, for the pandemic period. Okay, so the pandemic period was one uptrend channel, or two or three, with different slopes. Yeah, you draw that channel for the uptrend. Yeah.
This was one big channel in pandemic.
Yeah, or you can make it one big channel, or two narrow channels.
Or two narrow channels, yes.
Yeah, with two different slopes. A more flat, lower slope on the second half of the channel, for the second channel.
Yeah. I just included this extreme and this extreme value.
And that's fine too. So it's a wider channel is fine with me. There's no problem with that. So that's all everything is to me. So if we find the energy to break this pennant, then we go higher.
And by the way,
we
on the last call that you and I had, I
Mhm.
made this upside down channel. It's testing
Yeah, that's a
back.
good one. That's a great one. That's a great one. I like that one a lot.
So no matter
like
what time frame you're looking at, daily or weekly, look how it is like just getting stuck in this channel.
So what I do is I don't believe in Fibonacci's, as I'm publicly out there with, but what I do subscribe to, since I've been drawing all these lines in the pandemic and seeing how you make these wide bands, I subscribe to the philosophy of having multiple, like making as wide a band as possible and having lines inside that. Now, I'm not going to put my lines at the Fibonacci's because I don't think Fibonacci's
you can just consider them
valuable.
as parallel lines.
Yeah, I'm just going to put parallel lines. That's what I'm saying. And I'll draw my parallel lines where I want them, like at the 50% mark.
That's your choice.
Yeah. But I do like the wider channels that capture all the candles.
But the way I'm like looking at different time granularities, the pennant that we made,
yes,
plus these purple lines, every time it goes up, like here, comes down, takes a support at this trend line, tries to go back up, stops right here. It kind of tagging along across this.
Agreed. There's tremendous buying pressure at the lows. Yeah. So I don't really try to do a value assessment like Buffett would claim he does. He says, I look for book values. I look for valuations that are low. So in my assessment, the market will tell me when valuations are low by having buying pressure at certain levels where demand is outstripping supply. Where demand is outstripping supply, in my definition, is saying the market is finding value in stocks at those levels. And I think that the market currently, for the last couple of weeks or months, is indicating that it sees stocks as being cheap down here because it keeps buying them all the time.
Yeah.
At certain lower levels. Yeah. At higher lows. So
every time it goes below 11,000, sorry,
yes.
11,600, the buyers come in.
Buyers come in. So that's a market telling me they find value in stocks at these levels.
And also, if you notice, Javed, every time we enter into this zone, there is a doji.
Yeah.
We exit, there is a doji. We enter, there is a doji. We exit, there is a doji. And 3 days back, there was this classic doji. Again, a sign of reversal. We bounce right from there.
Exactly. Now, the flip side is that the market has been going up so long for decades that it has a hard time trying to find the energy to go lower. Okay. So it needs to coil for a long time before it can get to the next leg lower. Okay. So there is that theory out there that, if the Fed has screwed it up so badly that it's going to take them a really long time to throw us into an economic slowdown that we need, and they're not pushing the pedal hard enough to get us there, then the market is taking its sweet time to find lower and lower levels. That could be the case. So nobody knows how a pennant's going to break out. Honestly, pennants are supposed to break in the prevailing trend, and the prevailing trend has been down. So, there is all that. However, that being said, usually when you want to see a break lower from something like this, you're supposed to have a triangle, a descending triangle, where all the levels were the same at the bottom. They're not. They're ascending.
If anything, let me I'll show you a different perspective. So this is a pennant on the way down on daily, but if you look at the same chart on weekly, it's nothing but an ascending triangle.
Oh, that's a good point too. It's a very clear ascending triangle. So that's also good to see.
It's a classic ascending triangle. All these candles are perfectly lined right here at 12,000.
Oh, that's a good point. That makes it clear. So ascending triangles are supposed to always break higher. So that's good.
Yeah. So what needs to be seen is this is the way I read is every time the bears try to take the market here, the bulls are capturing. So
there you go.
I can see this as opposite of what happened here.
There you go.
The consolidation phase at the top, the consolidation phase at the bottom. And from here, we rally up.
Now, the interesting thing in terms of global money flows outside of this chart, every country in the world is going to devalue against the dollar as we raise rates, because no country is going to be able to raise rates as quickly as we are, so their currencies will depreciate. So any returns they're getting in assets in their countries are going to be lower returns when you factor in a dollar return to what they're getting, right? So that money needs to come here at the end of the day. And I'm waiting for that effect to flow in. But that's, I think, going to be a major effect of all the money in the world pouring into US dollar assets. Because when you count the dollar effect of return on your asset, it's a lot. You don't even have to move very much. The dollar is moving so strongly that as long as you're holding in assets in dollars as an international investor, you're making 20% over the last couple of months. Just the fact that it was in dollars, it didn't even have to move. If you bought something in real estate in America as a foreigner a year ago, you made like 20-30% just because you held it in US dollars compared to your own currency. It has to come here at some point, if it hasn't already. And, as opposed to buying the US dollar itself, where if you bought a 10-year treasury, you only get 2 to 3%. If you buy the market, you have the potential to make much higher returns if you buy US dollar with equity assets, potentially. So that I think that we're going to start seeing that effect at some point. The other effect I think we're going to start seeing is, as you hear Google, Amazon, all these guys, Facebook saying they're slowing down hiring, that's going to give them cash to buy back their shares. It's going to give them lower costs, so their earnings go up. So both their shares are going to go down, their share count, and their earnings are going to go higher, even if they don't sell an increased number of widgets to the public, to their customer base. They don't have to do anything on the base revenues. All they have to do at this point is keep doing what they're doing, which is buying back their shares and cutting their costs by not hiring as quickly, and their earnings per share should go up. So even if we have the same price multiples across industries, multiples should get cheaper because the denominator is getting higher. P over E, the EPS is going up. So you need to see the price of stocks go up too, because the PEs have gotten cheaper, So that's, again, see, What people don't understand is you don't need these companies to sell more goods and services to more people. You just need either the P to go down or the E to go up. And we're seeing the E go up. And that's why people are seeing value where they didn't see value before. Because the E is going to keep going up. And they're buying that increase in EPS going forward.
Javed, it's funny you mentioned that, because one of my theories is that the reason why we have been getting a significant buying pressure at the bottom right now over the past 6 weeks, and we have this massive dojis, is because and if you look at the dojis, okay, funny enough, the bottoms of those dojis are the first, like in the beginning of the month and the middle of the month, when 401k is being bought.
Oh, good point. Very good point.
And at those points in time, right, when Microsoft and Amazon and some of these stocks, because they have been beaten down so much, they're actually entering value territory for then that 401k investor that is invested into the value bucket. One of their choices of their investment is going to be value stocks, right?
Yep.
At that point in time, it's going and it's actually buying Microsoft. It's going and it's buying, some of these beaten down tech companies, because they have entered, quote unquote, value territory.
Yeah, it's 100%.
They previously did not touch.
That's 100% right.
Based on their mandate.
Yeah.
I mean, I have no way of.
I got something there too, me. Actually, I always try to bring something new. I'm gonna add to what you said. So 384,000 increase in non-farm payrolls, right? I think was the point. And that chart is a freight train, right? It just keeps going up and to the right. It's almost like you sewed it on the chart, right? It's just up and to the right. And every cycle, it's always been that way, right? Up and to the right on payrolls, the whole recovery. They always look like carbon copies. Now, here's the interesting new nugget I'm going to bring up, complementing what you're saying, which I never said before, which I just thought of while you were speaking. So historically, if you think about modern portfolio theory, which is invented in the 50s for a Nobel Prize, I believe that it took like 40 years later that they got them a Nobel Prize in economics. Modern portfolio theory, MPT, suggests, and every financial advisor knows this by heart, you invest in a certain ratio of 3 buckets: equities, fixed income, and cash. So when you're young, you have a heavily skewed towards equities and less bonds and cash, because you have your whole life ahead of you to make the money back if you lose it. So you can take more risk, so you get more upside up front. When you're older, you might die sooner statistically, so you have more bonds and cash, less equities. Here's the interesting flip side to that component, which will dovetail with what Nomi said. 401ks now are heavily skewed. If we all read the documentation behind a target date fund, which is probably what everybody is automatically thrown into as a default, unless they opt out of it, right? A target date fund will follow modern portfolio theory. They probably, as a fiduciary, they have to, right?
Yep.
So everybody's in bonds. Look at your parents' target date fund. They're all in bonds as baby boomers over 70 years old, as my parents are. They're all in bonds. So that's what the target date would do, because they're over 70. They're retired. So that's going to change. As the baby boomers die, all 401ks will be heavily equity skewed. Because if you look at generations and the composition demographically of generations, I'm talking about size-wise. The baby boomers were obviously the biggest generation, and there will never be as big a generation given the development of countries. Everybody has less kids. So there will never be another baby boom unless the world changes in a significant revolutionary way. So that was the biggest. Now, unfortunately, the smallest, or maybe fortunately, because we're all unicorns in a way, one of the smallest was Gen X. It barely exists. I'm Gen Xer. So we're not really there in a meaningful way. But everybody underneath us is sizable. So they're all equities. Now, if Gen Xers was this next biggest generation, we'd still have a ton of bond guys in their target date funds, but we don't exist. We're almost invisible, just a sliver. So it's really the millennials and below, Gen Y. I forget all the other names, but it's all them in the workforce, and they're making significant amount of income as they enter all these service jobs. So that's going to be where 401ks live, composition wise. It's not talked about too much, but as the baby boomers die, all target date funds are largely going to be equities because everybody's young who owns a target date fund. So that shift alone structurally should take a ton of bond capital and move it into the equity markets just because of modern portfolio theory and who is automatically buying a 401k. And that's something new I want to add to the dialogue that I never brought up before. That shift is happening.
I mean, that's something I 100% agree with. But alternatively, what's happening is 401k as a benefit.
Oh, that's mandatory now, right? Like that's like automatic for everybody now, right? With the new retirement bill that went through Congress, everybody
I
like
don't know. Has it passed yet?
level gets a 401k now. I think like almost every employer is providing it. It's not mandatory. That's probably the wrong word, but I think that almost everybody will have an option to provide it for their employees, even smaller and smaller companies now.
Yeah, I mean that's something that I've been following a little bit, and
that's
overall
actually
one of the problems that I see is that there's going to be a lot of companies that just aren't going to be able to compete.
So what's going to be very interesting is as we move even to a heavily more service-oriented economy, or where the only jobs that will allow you to pay your rent and pay for food are a salary job, then we're going to have so many more 401k buyers in the market, like 401k investors, because guys who are out of that, who are, let's say, wage workers, there'll be so much smaller composition of the overall economy. Inflation forces that. You can't pay rent at $15 an hour and pay for food. It's very challenging, so, and definitely $7 or $10 an hour, extremely challenging. Because rent, it's small, fewer and fewer places where you can find that rent. Even in the cities that were out in the boonies in America, even those are going through the roof because everybody wants to live in the boonies and work remotely. So you can't find that cheap rent. You cannot find that cheap food as easily as you used to. It forces you to go to that higher salary job. And that higher salary job always comes with benefits that include a 401k. So we're going to see a lot more people, I think, enter the 401k investing cycle. And a lot more of them won't be boomers who are at the end of their life, but will be younger people who are more invested in equities and target date funds structurally. But I think that mega trend is going to hit the equity markets eventually.
So, do you think we are still continuing the U recovery like we discussed a couple of weeks back?
Yeah, so what drives the U recovery, I think, is the fact that all these things I'm talking about on the mega trend are a serious challenge in fighting inflation. So if everybody's making a higher salary job, which they're supposed to do, if they're all investing in themselves and putting money in 401k, then they can more afford the higher prices that we live with. That makes it a chicken and the egg issue for the Fed and everybody trying to slow things down, right? So, because there's too much momentum of people moving into those roles, that the Fed has a real big challenge on its hand in terms of slowing things down hard enough and fast enough to keep inflation at bay, you know. So that's going to be a real problem. The other thing is, it's probably a lot easier to get into roles now, because I brought this up with Danish, and not a day goes by that I don't experience a massive drop off in excellence and service out there. So a lot more people are going to be able to get into these jobs as well going forward. So it's going to make the Fed's job a lot harder, because what slowed things down before is the fact that hiring was more restricted. And even though the big companies are saying they're not restricting as much, at the end of the day, there's so many jobs out there for people that they're going to find ways to be able to afford the life that they want to live, regardless of the prices that are there. And that's going to make it extremely challenging to bring this inflation down. I think it's going to be hard.
I think the biggest cause of inflation is not is more so the supply issues out of China, more than anything
Hopefully,
else.
I would hope so. I would hope that that is really what's driving it. And that's why the Fed said they made a mistake. They thought everything was temporary. Then we had a ton of more temporary stuff. Like, who would have thought Shanghai was going to shut down 2 years, almost 3 years into a pandemic? I mean, how is the Fed going to know that they were going to act so stupidly? And I'm just going to say that. I'm going to make that judgment call to shut people down 3 years into a pandemic that's borderline asinine, in my opinion. So Fed could never predict that kind of supply chain breakup. So that's a really good point, Nomi, is that's like the $1 trillion question, is how much of this is temporary supply chain problems and how much of it is so entrenched because people are making more money and higher paid jobs, and it's easier to get into those jobs too, or easier to train yourself to be able to access those jobs, because you don't need to go get $100,000 degree for a lot of these positions, and you can.
I think it's just everything these days, right? Like access to data,
Yes.
access to information. I mean, I was I was having a conversation with someone else the other day. So, they were talking about consumer sales is falling, right? Where the retail shopper is not buying luxury goods as much. Okay, well, alternatively, New York City restaurants are now serving food, some of them until 2 a.m. So I can go in and have a steak at 1:30 in the morning without any issues. So now that employee that was previously working at, Bloomingdale's or Foot Locker, okay, fine, maybe he lost his job, I'm sorry, okay. But alternatively, now on his phone, he can go in and apply to jobs at that restaurant that is now serving food until 1 a.m. because the demand and supply economics, right, changes based on what the consumer wants and needs. 50 years ago, when that shift happened, it took significantly longer for that employee to know and understand that, and then to apply to that alternative field, right? Being 20 miles away from there.
I agree
Today's
with
day
that.
and age, all that data is on your phone. It's being talked about on the news. You can log on your phone and you can say, okay, I can apply to a restaurant that is 20 miles away from me, and it's a high-end place that is, paying reasonable wages. The normal person did not have access to that data, even up to about 15 years ago. right? We didn't really have Indeed and, the small business owner posting their jobs on the internet,
Yeah.
more so up until about even 10 years ago, right? So all these dynamics, just the world itself has shifted so much. And I think that's one of the pieces that the investor today is not taking into account. They're just not thinking about it because it's something that is so second nature to the investor that they're not thinking of the major shift. And so for me, I consider myself very fortunate. My dad, he bought our first computer, home PC, early 1990s, right? We had our computer in our house, right? But like I had my first cell phone in 1999 or 1995 or something like that. Okay. But then when you talk to other people, right? Um, they didn't have a laptop until the point they got to college when they absolutely needed a laptop, right? So that means their parents aren't even educated. They don't even have the know-how of how to use a computer. So now there's this massive, shift, and it goes back to the conversation, you were having earlier, that, the baby boomer, they're going to be passing away. The needle is going to be shifting to the younger generation. Well, this younger generation that's going to be coming up has, they have the experience of using technology, and with that, they have the data to know how to get themselves a job again, how to buy something for a lower cost, how to open a Amazon store, Shopify store, or sell things online, etc. And it just kind of keeps going, right? From the simple, utility of a mobile device and having the data and being able to use the internet,
Yeah, no,
which is
I, I,
huge,
I agree with that. I mean,
massive, massive.
what surprises me about the data and using it is that what constantly frustrates me in a way is that if we have the data to understand supply chains better and move things around and have dropship and Shopify and all these things supposedly competing with Amazon and Walmart and Target and the big guys, then why aren't we debottlenecking supply chains globally faster than we are? I mean, supply chains seem to get as stuck as they've always been my whole life. Like, why hasn't that changed faster? Because I would think goods and services would come down in price faster. Now, one thing that artificially keeps that from moving better is all the bullshit of federal regulation and tariffs and subsidies and floors and ceilings that the government puts in to artificially protect their supposedly artificially protect their industries. There's always other motivations there, but they put it out to the public that we are protecting America's ability to have food by putting a ridiculous subsidy on corn. We're protecting America's ability to create clothes and garments by putting a ridiculous protection on the cotton industry. That's why they call it King Cotton. So this stuff always keeps us from debot. I probably answered my own question. So
Well, I mean,
all the
and I
regular.
mean to that, well, to that, right? So what did the Biden administration do now? They they removed the gas tax, right?
And
So they
they
pretty much
want to
said,
lower Chinese tariffs too, right? Yeah.
yeah, I
All
mean,
the
Chinese
Trump
tariffs.
that they put
When
in
I
for.
think,
Yeah.
well, some of the supply chain. So I think the two absolute biggest things that has messed up supply chain is, one, China's closed. Okay,
Yeah,
China
I
is
agree with
closed
that.
for business.
I
Okay,
agree with
agree it
that.
or not, believe it or not, they are closed for business.
And companies are going to permanently leave because of what they did.
Yes.
They've already stated that. They're not going to put
So
up.
now we have been depending on China for the past, I don't know, 30 years plus.
Yeah, I got a question for you, Nomi. Why hasn't, I mean, it's mainly been since China entered the WTO in 2001, the World Trade Organization. But I got a question for you. Why haven't we diversified outside of China as a source for goods in the last 20 years? Why has it all been China? Why hasn't it been other countries? Why hasn't it been countries in our own hemisphere, in the Western hemisphere, that we are friendly with? Like, why haven't we?
Because you need leadership. You need a very large population to build out the infrastructure needed to supply. It's not as simple as saying, I'm going to make a million shirts.
I can give that answer in one simple analogy. China is doing what America used to do 70 years ago.
Yep.
And what is that?
America went, during Second World War, America went all into the manufacturing, the whole workforce. When all the men were out there fighting, all the women and anybody else that could work, they were working day in and day out.
Okay, so that's manufacturing, but even services. Why is the only offshoring we're doing is getting call centers from India? Like, why don't we have accounting services from Ukraine or Poland or Mexico? Like, why? What's the problem here? Why aren't we getting services as well as goods from I understand the massive amount of investment you need for. I probably saw.
No, it comes from it comes from a population, right? So, Philippines,
they have the numbers,
is very well involved, right? Eastern Europe is very well involved in providing these offshore services. But when you have a country like India that has 1 billion people plus, I think it's like 1.3 billion people, right? Even if 20% of the workforce enters, you're not talking about 300 million people.
Yeah, you're right. You're right.
It's a numbers game. It's a pure numbers.
And then it becomes
India has
cheaper,
1.38 and China has 1.4. So together, India and China are 2.8 billion people.
Yeah.
And it's a pure numbers game, right?
It's even more than that. So India, there's these articles, and I'm sure Nobi has read these articles, where it says too many computer science degrees in India, and it's worth nothing now because everybody has a computer science degree. So you can't get a job anymore because everybody has a computer science degree. That actually makes it very good for the consuming countries because it makes it so much cheaper to pay for that computer science graduate. Now, if India can graduate so many computer science people that none of those guys can find jobs, then it's very hard for a Mexico or Argentina or Colombia, Poland, to bring in that many people with that many degrees to say our price is cheaper than India. That's a very good point. Plus, India, I always say, because I'm a big English file, but India has the biggest number of English speaking people, so you don't have to cross the language barrier either when you deal with them. So, and that's why it always surprises me that China, on a goods basis, yeah, I get it. But actually, the other part I didn't bring up, which I actually know the answer to build up the massive infrastructure that Danish is talking about for manufacturing, even before that, you need country infrastructure, namely energy and transport, like transportation. So roads, bridges, highways, airports, railways. Right? Yeah, all project finance. So this takes hundreds of billions of dollars to build. And just for even the sheer size of capital and know-how, it holds other countries back, because even if they have the educated workforce, they can't move the goods because they just can't get it to the ports or get it on the planes. They just can't get it out of the country. So that holds them back. China made a huge investment to do that.
And then from earlier, the second point that I had, is one of the going back to supply chain, right? Um, so some studies show that during COVID, the amount of people that moved, like left cities and moved to suburbs, right, is as high, if not more, from a percentage basis as compared to World War II.
Oh yeah,
When
that's a good
people
point.
actually came back,
Yeah,
from World War II, the amount of shifting, moving, just that relocation.
that's a very good point. And the last mile is always the hardest. The last
Exactly.
mile is where you get stuck.
Yeah.
Getting it from California to the East Coast, no problem. Getting it to your house in East Brunswick, massive problem, you know? So the last mile is always the most expensive. And the fact that they're moving out to the suburbs makes that last mile problem exponentially harder. You're right. That's why Amazon's buying their own plane fleets, right? At the end of the day. That's going to be tough to fill those supply chain issues big time, and that keeps inflation high. And where's the government incentivizing the industries that would solve this problem? Maybe using data, right? I don't think we have that kind of innovation regulatory policy, legislative policy, executive policies. So we're entrenched. I think inflation is as scary as J Powell makes it out to be, and I think it's going to be as challenging as he makes it out to be, too, given the issues we covered. So that is a long way of answering your question of going in a U-shaped recovery, or as we used to joke in energy, an L-shaped recovery.
Yeah.
Hmm.
We always say in energy, is this an L-shaped recovery, which means we're never going to pull out, So as long as inflation is a problem that hasn't been solved, I think we definitely have the tendency to go sideways in that environment.
Yeah. Yeah.
But I mean, the system is working on that, right?
It's so slow, though. It's frustrating to me, how slow it is in doing it.
It's not so. This is another problem, right? Because everyone has gotten so used to Amazon deliveries
Yeah.
that they think the entire world works like Amazon deliveries. Anytime where you have a solid candle without a wick at the top, that means that the current candle is slightly overextended, and
Like
the
this
next
one,
candle,
like this one,
yes,
like this one,
exactly,
like this
yes,
one
and
right
that
here.
means the next candle is going to have some sort of a retracement. You don't know how much the retracement is going to be, but there will be a retracement. So
Yeah.
for me, I'm trying to be patient, to identify those tops, to then sell a call at the top for the retracement of being $1, $2 in the money, because I'm okay sometimes getting a significantly higher probability of being able to close my covered call in a green, if that means that I have to play market risk. So like today's candle, it closed as a solid green. So even if the Sunday night candle opens and goes up first, there should be a retracement of at least 25%, if not more,
That
on
brings us,
today's candle.
so that brings us back into this wedge or pennant.
Correct. Yes. And even though we have VIX at the bottom, we would go and we would test certain level of that VIX at the bottom.
I have a similar thing here.
So I guess from a ES terms, it would be, I guess, 38, 38,
Mid
35, 38,
3800s.
40. Yeah, mid 3800s. Yeah, because, and you see it, there's a clear support, there's a clear midline being established right there. Exactly, right there. And look what it comes to. It comes exactly to the weekend of before FOMC.
This one right here.
FOMC is
Danish-
July 25th. Yep, right
Danish
there.
did an interesting thing. He just saw that it was a downtrend line, and he just stayed in cash the whole time until he figured the downtrend is over. But the
Dude, that was
downtrend line has not been broken, Danish. So why did you decide
I
not
know.
to be in cash?
So
The
I was
downtrend line
looking.
is still in place.
So I was looking at my setup, and when my setup gave me pretty convincing answer that this is somewhere I can scalp a few points. So I'm not doing any swing trades. I'm more of a scalper.
Oh, you're not
Dude,
going to
that's
stay in?
genius.
You're not going to stay in until we break the downtrend line?
No, I am staying for only as long as I'm in front of my system.
Yes.
When are you gonna stay in as a long-term guy?
We need to start making higher lows and higher highs.
So we didn't do the higher highs yet. We only did higher lows. We didn't break
Yes.
any downtrend lines yet.
That's right. So I showed you the NASDAQ chart. Look at ES chart. We have exactly the same ascending triangle.
So we got to break that at least. Then we'll have higher highs.
So 3904 is the line in the sand on ES.
So for all the mistakes that were made in this downtrend, the one encouraging thing is every downtrend looks the same. It's one big channel, right? Like forever, not just now, like going back decades, right? Every downtrend looks exactly the same. So the easy thing is to see that it's a downtrend and know that it's a downtrend eventually when you're in it. The hard thing is to figure out what to do, accepting that you're in that longer term downtrend. So
I cashed out about 30-40% right there where your cursor is right now at the next
Mhm.
red candle.
Mm-hmm.
I cashed out about 30-40%. But then throughout the process, I mean, my target was always 10-6. I've been calling 10-6 since January. But I tried scalping it, along
So
the
that's what I've
way.
been doing. If I trade all this while, my money is in market only for the duration I'm in front of my system.
Yeah. Yeah. That's the only way to trade this market at the moment.
Yeah.
well, you could have swing
Or
traded it down.
very deep out of the money.
Yeah, you could have swing traded it down, like deep in the money's all the way down.
Yeah, I mean, I have some deep in the monies on certain things.
No, I
But
mean,
it's not even worth it. But it's just not even worth. It's just even worth sometimes.
Yeah, you don't get
the
that.
fact that you have to watch, for that many hours. Unless you have a setup. And for me, the setups I'm personally looking for are setups where there are VIX at the bottom. Like right now,
Well,
the 620 was a setup for me. It was a pure setup because you had multiple fundamental and technical issues that came together that said that we were going to get sideways by the dip.
Well, I'll
So
give you
yes,
another.
right now it's been worth trading.
I'll give you another
scalping.
in hindsight 2020 for the next time, where you don't have to be in front of your screen and you don't have to be a scalper. So I'll give you another formula that keeps it hands off, but keeps you right in the downturn. So what you do is, and I came to this after all this time, after all the mistakes, but you do the opposite of what you do on the upturn. So it's that you can put your strike anywhere and just you either choose in the money, at the money, or out of the money. As you made a point, in the money doesn't help you that much. So choose at the money or out of the money, right? But here's your rule. You're not allowed to roll up ever in the downturn until you see the whites of their eyes, like Danish is looking for, which is you have to get a break of the downtrend line on at least a daily or weekly, nothing shorter than that. Then you can
But if you're at or out of the money and this thing drops $5,
doesn't matter. You're
$8
gonna
on
make
you.
loss. I'm not saying you're not gonna make losses. Just hear me out, okay?
Mhm.
I'm not saying you're not going to make losses,
Mhm,
but
mhm.
you're going to not lose your shares. Okay. So you're going to collect premium and add to your share base, and you're not going to lose your shares if you don't roll up the whole 7 months. Okay, so you're going to lose money like everybody did, but you're going to be dollar cost averaging because you're going to be picking up the shares the whole way down from the premium you collected at the money or out of the money. And you're never going to lose your shares because you're never rolling up. You don't get to roll up higher than the last strike that you sold. That way
previous
you
high.
will, yeah. What? You what? Previous
The
high.
previous
Yeah.
high.
Yeah, whatever strike you sold. So you're not allowed, that way you're technically not rolling up. So if you have to wait a week, you have to wait a week, but you don't get to roll up at all.
Yeah.
You
Yeah.
have to keep rolling to lower strikes until you see a higher high. You're going to lose money, but you're going to be dollar cost averaging at a tremendous rate. So you're losing money slow.
I don't know. I mean, it's sometimes it's like, it's, hey, yes, continue collecting rent, but I mean, look at those reds, right? When you see
No,
those
those reds
red
are,
days, yeah, when you see
but
those
I say,
reds, it gets very difficult to say, yeah, okay, I got, $1, but I lost 10.
no, but what I'm saying is you don't get to roll up until you actually have a break of
No,
the
but I mean,
downtrend.
no, but look at these 4 red days, right? We went from 4156. We came down. We had a sideways chop to then drop to 36. I mean, that is a near 12% drop. Yeah.
Yeah, what I'm saying is you're going to be collecting that whole time down. Now
At
you
the
give
But
up the
that
green
no,
day.
but that's if you're rolling down
No,
on a
you're always,
daily basis.
no, you don't have to roll down on a daily basis. So since you're always forced not to roll up, you are rolling down every week or every other week. It doesn't matter. As long as the price is lower, you're rolling down. So this whole 6 months, there's been opportunities to roll down lower than where you were before. Now the
Yeah,
sideways
it's not.
time, the sideways time you could do what Donish did and say the top of the box. That's fine. You don't get to roll higher than the top of the box. That's okay. But it's kind of been 2 segments really. Down those first couple of months and then sideways a month or 2. So you don't get to roll when you're in a box, the top of the box, and when you're in the downtrend, you don't get to roll higher than your last strike. And that way you're collecting premium, not losing your shares. And you don't get chopped out. You have a very high risk of getting chopped up when you're scalping. So that's the problem with scalping.
No, unless you find the VIX, right?
It's,
when you have a VIX.
It's always, I don't know anybody who's a good scalper, honestly. I don't think.
No, but when
exists
you have
you're
a
in
VIX,
machine.
right? And you see it. You see it right in the chart. Anytime you have a VIX at the bottom, the probability of the next candle giving you a VIX or green is significantly higher. Especially if you look at it on a daily basis. And you don't have to, say, hey, I'm going in. I'm gonna buy into all-time high. But if you buy in 1,000 shares and you are then, scalping 25 cents, right?
It's also too much work for the fruit that you get from it. It's just talk to your
it is too
doctor.
much work.
Talk to your
Yeah, it
doctor
is.
about how he feels about that kind of lifestyle.
Yeah, it is a lot of work.
That's a lot of work. For if
No,
you,
and talk to your doctors about how they feel about your health at the end of it.
Yeah. Yeah.
Well, what good is the money if you can't live to spend it, right?
Agree.
You're fried at the end of the day. You don't even have a life after 4 o'clock.
with that kind of trade, you are practically fried.
Yes.
So the rest
because
of your day
you're
is
just
shot
constantly
too.
watching.
The rest of your day is shot as well.
Yeah. Another alternative there is when you see those VIX Then you start selling another 3%, 5% down in the money cash secured puts.
No, I'll tell you something, and hold on, just bear with me. So this is what I've been tracking
What's the time period on this chart?
daily, VIX daily.
Yep.
That's a good channel. How
Yeah.
far back does that go?
November 2021.
That's an
Yeah.
excellent chart, actually.
That's a freaking channel.
Yeah, I didn't know if VIX could create a channel, but that's pretty good then, if it can.
I mean,
VIX is
always has
always
a
in a
channel.
channel. Well,
VIX is
VIX
always
is
in a
always
channel.
mean reverting, so it always should be in a channel, right?
VIX
It's
is always
mean
in
reverting.
a chop, like
Yeah,
cycle,
because
not
it's
in a
mean
channel.
reverting, right? Vol is mean reverting by definition.
Yes, exactly.
So
It's always in a channel.
I created these levels, Javed and Ali, 20, 23, and 26. So below this 20, it's dark green, obviously. Market is very happy. From 20 to 23, it's a few red days, but you know, it's a normal zone. Beyond 23 to 26, it's pretty turbulent, but in the normal sense of things. But when you look at the grand scale of things, whenever it has spiked above 26, and I can, for the ease of visibility, put it on a weekly chart. Whenever it went above 26, it has wreaked havoc.
Yeah, there's a reason for that.
Yep.
I mean, just like
Now
when
channel's
you don't
pointing
wanna,
upwards, right?
Now
just
it's
like,
trying to come down.
No. Look at your channel. Your channel is now time to go up.
Yeah, so next week, that's like anywhere from Monday to Wednesday. Wednesday is the new contract change. So Monday and Tuesday, the volume will shift to the new contract, which is already trading at a higher price. I'll show you the CBOE data.
Yeah, it is. It's at a higher price.
So the current contract, the lowest it went was 25.10, and the new contract is already trading at 26.6. So that puts us again above this red line.
Yep.
So when the volume shifts and we see a gap up open,
Yep.
like this one right here, third Wednesday.
No, but you see the difference between this, I mean, it's going to depend what happens Monday, Tuesday, Wednesday. Because if you look at the previous ones, right? The new contract was a bullish engulfing automatically.
Well, that happens in the real time basis. I cannot predict that, but for now,
But that's gonna be a real time thing, yeah.
yeah, we cannot predict that, right? Because VIX is not as technical as ES or
Yep.
NASDAQ. So it's going to gap up hopefully on Monday or Tuesday VIX, which will translate into a red day on ES or NASDAQ, which ties into what you were saying, that we will see a retracement, at least
Yep.
25 to 50% of this candle.
Mhm.
go back to the VIX. Go back to the VIX. Let me see. That's a daily.
That's daily. Background says 1D, right? VIX daily.
What if the VIX go back? Yeah, hold it right there. What if the VIX tries to penetrate that box that we had from April to May?
On the downside,
Yeah, look at April to May.
if VIX falls below in this zone and keeps going below 23 like here and continues its journey, we will see something like this. I'll show you
No, not even below that. I say come in and then go sideways into that green line zone. See
yeah,
where
yeah,
you drew
that's
the
what
green line?
that's what I'm trying to show
Go
you.
sideways. Go sideways.
Yeah, that's
not
what
saying
I'm
it has
trying to show
keep
you.
going down.
If that
Sideways.
happens,
Oscillate in that green zone.
This one right here.
Yeah, like that. Yeah, exactly.
Or hold on, just give me a second, okay? This one right here
Yeah.
kept on oscillating right here. Okay?
Yeah, exactly.
Or in this band, even though
Yeah,
it was
mid to low,
heated,
mid
but it
to
kept
low 20s, mid to low 20s, high teen.
yeah. This one. This is definition of a melt up bull rally, like we
Yeah,
saw.
I think so. I think that makes sense.
But for now, I'm just being cautious.
Yeah, I think the rest of the summer is going to be dead. Just trade in a range.
Range is
then-
good. Range is good because you know, you can put your target on, take your money, and run back home.
Yeah.
Yeah, but you
As
don't
long
know
as
that,
they're in
right?
the box.
But
What?
you don't know that. That's just it's always a prediction until the candle
Yes,
actually
yes,
opens
yes.
and where it closes.
Yes, of
Yeah,
course.
that's why I
of
don't
course.
scalp. But at least you can figure out a range for a couple of weeks. I don't scalp because a couple of weeks is not scalping, but you can always figure out a range for a couple of weeks.
In the future?
Yeah. These channels are multi-month channels. So
You can see this is what
these
8
are
months already?
multi-month, multi-year channels, honestly speaking. So yes, you can figure out the next couple of weeks. You can't figure out the next couple of hours, very challenging.
175
But-
weeks. Oh,
yeah,
days.
175 weeks, it's been 3 channels. So yes, you can
175
figure
days,
out the
sorry.
next couple of weeks.
6 months.
Yeah. Yeah, 6 months. You can figure out living in the same channel, yeah. But the next couple of hours where it's really tough.
Oh, sorry. This
That's
is
why I
only
don't
the
scalp.
trading days. 8 months. 8 months.
Yeah. 8 months of channel. Same channel. Wide channel, but same channel. So that's how you figure out the next couple of weeks. It's always figure outable. But the next couple of
You can
hours
do the
where it
same thing
gets really
here.
tough.
Since November, this channel started showing up here.
Yeah.
Again, hindsight is 2020. I thought we are just consolidating here and to go upwards, but of course, market proved me wrong.
But the general box was apparent. We just never broke out of the box yet.
Yes, since November.
Yeah. That was yeah.
So if I put these side by side, oh, I don't have it here. So this channel started in November here. This one. And since then, it has been making higher lows, higher highs.
Except now.
I won't count my chickens before they hatch.
Well, except now. Now's the only time we made lower highs on the VIX.
But still not lower lows.
But still not lower lows. Yes.
Just like market is making higher lows, but not higher highs, VIX is making lower highs, but not lower
Yes.
lows,
Yeah. Mhm.
right?
Melt up.
Yep.
We don't know that. So we'll have to actually wait and see what market has to say. Right?
Yeah, it's going to be a struggle on the way. We'll be doing channels the whole way up.
No, no.
We'll be,
It's going to be all over.
No, it's gonna be all over. It's not
It's going to be
channel.
like 2018 at the very least. I'll show
sideways channels is what I'm saying. Like 18, sideways channels.
you. Yeah, 18 was a very weird recovery. It wasn't a V.
Yeah, like sideways channels the whole way up is. See all those sideways channels? Yeah.
It was hopping around, right?
Yep.
It was making higher lows and higher highs, but it was very sluggish.
Yeah,
You
it
could
was
not-
like sideways. the
You
whole
could
time.
not draw a channel here.
But you could draw a sideways channel.
Yeah. So the best thing you could
Since-
have drawn would have been
Up and then sideways and then up.
I'll show you.
Yeah, but once it made that lower low, right, in
Higher low.
June. No, it's a lower low in June. That June 2019, it's a lower low.
Look,
Yeah, that's what it is.
I did not
Up,
go.
Yeah.
sideways, up.
Yeah, but again, you see, like all that is always turns into hindsight.
Yeah, this is all hindsight.
Yeah.
Nobody can predict this, right?
No,
But that line is slow. It's like stays in the same slope for a while. So you can at least assume the slope will stay the same for a while.
that's if you're able to identify the slope.
Look at the weird curvature of this.
Yeah. That's if you're able to identify that slope.
That's right. So there will be retest of faith and support when we have recovery.
Yeah. That's why you just gotta always leave your covers on, your hedges on.
Yes, you're always averaging. You're always increasing your share count. That's the key. If you're always increasing your share count, you can't go wrong. Doesn't matter what the price is if you're increasing the share count at all times.
I'm trying to stick to $500 to $1,000 a day. That's been my go-to lately. $500, $1,000, $500, $1,000. Try to capture that before 10:30 a.m.
And you're doing that on ETF options?
ETFs, triple levered.
Okay. Okay.
triple
That's a lot
levered.
of hard work.
No. It's been going okay.
Yeah, it is what it is. I hear you.
I mean it's working, you know.
Thank you, everybody, for your time.
Thanks.
And hopefully we'll meet again.